Hi, welcome. I'm going to take a break from my data updates, which I've been working on for the last few weeks, and talk about the news of the week. You think, what news of the week? Unless you've been living under a rock, you've heard of DeepSeek, right? DeepSeek has changed the way we think about AI. It's crashed the AI party, and the question is, what happens now? Now, I don't have the answers, and before I get started, I have to start with a confession, which is I know very little about AI. In fact, probably know more about potato chips, and I've definitely eaten more of them than I know about AI chips. So, with that basis, that what I know about AI is pedestrian and that what I might be saying might be completely off the page, I'm going to try anyway, because it's never stopped me before. DeepSeek has clearly entered the conversation, but for me, this is part of something that started on November 30th of 2022. If you remember, that was the day ChatGPT entered the conversation. And that opened the door to the AI hype, the AI story. I held off for a moment, but I really had no choice but to enter the fray because I was in the AI space accidentally through an action I'd taken in 2018 by buying a company called Nvidia. A company I liked then because it was a very good chip company. I would be lying if I told you that I saw AI, on the horizon. I didn't. And because I held shares in Nvidia, Nvidia was one of the stocks that took off with the AI hype. I had to value Nvidia in June of 2023 to see if I should hold on. So that was my first session/post on AI, and you can go back and read it to see if, and the question I was asking is, does this AI story have legs? And I concluded that it did have legs. And by a year later, that had been confirmed. AI clearly was here to stay. And I revisited that story because, again, I still held on to some of my Nvidia, and an earnings report had come out with some bad news. And I wanted to ask, does this, create a change in the story? And, I revalued Nvidia. It was still overvalued, but by a little less. But, it was part of the sobering up of the AI story. And finally, in another post/session that I did in 2024, I looked at the threat that I felt from a bot that had been created, that had read everything that I'd ever written, watched everything that I'd ever put on YouTube, and I looked at every evaluation I'd ever done, a demoderate bot, and I asked the question, what can I do to stay ahead of my bot? So those were my three interactions with AI, and I'd kind of set it to the side until this week. So let's step back now. Let's think about the AI story. As I said, the actual story building up can be traced back to that date on November 30th of 2022. But AI has been around with us for a while because it reflects a coming together of two trends. One is more and more powerful computers in smaller and smaller packages, right? And the other is the accumulation of data about us, quantitative, qualitative, about what we do, what we spend, how we behaved, primarily on tech platforms. So you think, what made ChatGPT so consequential? Because it brought AI into the public consciousness. It showed up in our daily lives. My wife teaches fifth grade, and she saw it in our classroom. You probably saw it in your in AI videos that showed up that on your feed. So it was everywhere, and we had no place to hide. And it became the basis for the AI buzz that's driven markets since that day. Okay? And the story itself, if you think about it, before DeepSeek came along this weekend, was built on the following pieces. The lead piece was that eventually we would all be a market for AI products and services, which would make our lives easier, that we would spend money on these products and services. How big would this market be? Nobody really knew, but they said it's going to be trillions of dollars, 3 trillion, 4 trillion, 5 trillion. A big market for AI products and services that would make our lives working as well as our personal lives easier. That's a starting point. The other big piece of this story was that to enter this market as somebody producing AI products and services, you needed two things. One is supercomputing power, powered by chips so powerful that only one company out there knew how to make them right now. which is Nvidia. Others were scrambling, but Nvidia had the lead. And access to immense amounts of data, perhaps on platforms. Supercomputing plus data. That already creates a structure for the market that you would see emerging out of it, because it creates entry costs for somebody to enter. So the market, at least, that would be created, this story, is an AI market which should be dominated by a few big companies, more winner-take-all companies. Huge market for products and services, big entry costs because you needed supercomputing power and data. And the resulting business would be a business where a few companies would make immense amounts of money. Now, if you think about the winners from this story, that AI architecture of supercomputing and data creates three winners. One is you needed to invest in computing power, in chips and supercomputers. You need the energy to run these data centers because these chips don't run themselves. So you had power companies that effectively tried to make money on the AI space, and some did. And you had to cool these data centers down. There's a whole bunch of businesses in that space. And the processing of the data in these supercomputers required software and the data itself. So these are the companies that build off the architecture. Think of them as the immediate winners, because that's where the money is going now, is in building the architecture. Then, of course, when you look about the business structure and the winners here, who's going to win? If you think about what you need, supercomputing power and lots of money to spend on it, and data, big tech starts with an advantage. So the assumption was that the Microsofts and the Metas are going to have a lead in this game. Not guaranteed to win, but now more likely to win. And of course, there will be innovators for subsegments of the AI space who will create customized solutions, again using powerful computers and data for the sectors they operate in. And of course, there'll be ripple effects where there'll be other beneficiaries. You'll have employees at these companies who presumably will ride the AI wave to insane compensation contracts and huge amounts of money. And consultants who will tell businesses how to use these AI products and services. Nice, big business, lots of money. And this has driven markets for much of the last 2 years. That was until last Friday. Now, if you look at the beneficiaries from this story, there were many, but I'll pick a subset. I picked 5 AI companies. There are many more in this space, but I picked 5 high-profile ones. Nvidia, Broadcom, Constellation Energy, and Vistra are both energy companies, and Palantir, which might be one of the few AI product and service companies that actually has figured out perhaps a way to make money. So 5 companies in the space. 4 architecture, 1 product and service company, and they've had a good ride. So what I've looked at here is the change in market cap across the last 4 years. So think of 2021 and 2022 as pre-AI, and 2023 and 2024 as the AI story. And I've looked at the percentage increase in market cap in these companies, and as well as the dollar increase. Now, if you look at the percentage increase, the biggest winner is Palantir, 1,285% in the last 2 years. But in terms of dollar terms, hands down, Nvidia is the winner, added almost $3 trillion in market cap in those 2 years. Now, I also want to bring in the big tech companies in the story. So I've looked at the Mag 6, but basically I took Nvidia out because you've seen Nvidia in the other table. And I look at the other 6 companies, they've perhaps benefited from AI. It's tough to tell because they have these other businesses on which they make money. But clearly, all of these companies have had very good 2-year period in 2023 and 24. In fact, all of them have added $1 trillion plus. And Tesla is very close to $1 trillion, $996 billion. Now, how much of this is AI is debatable, but clearly some of this at least is attributable to AI. So coming into Friday, we've had a couple of years of AI talk, and the market has bought into the talk, and investors and companies have benefited. So in September of 2024, when I valued Nvidia, I built in the story as it stood that day. And my inputs reflected that story. So when I projected out revenue growth for Nvidia, the big market story that you needed the Nvidia chips to drive this market drove the growth rate I used in revenues. When I told a story about profitability, that fact that Nvidia was a first mover here and would continue to have a significant advantage animated my assumption that they would continue to have nosebleed margins, gross and operating margins of 75 and 60%. When I talked about, their capacity to earn high returns on capital, again, the same story played out. So my point is, I'm not going to claim to be immune from the story. It's built into my Nvidia valuation. But the bottom line, the reason I was skeptical about the pricing is even with the big story in September of 2024, I came up with a value of about $87, and that was below the stock price then. And that stock price had reflected a drop that Nvidia had seen after the earnings report, $109. So even with the big story, I found Nvidia to play. But as I said, the big story, the AI story, was everywhere. My estimate for the AI chip market was $500 billion. That's huge, but the only reason it's $500 billion is the ultimate product and service market is $3 trillion, $4 trillion, $5 trillion. Maybe people were making up these numbers, but if you have a market that big and you need the chips, $500 billion. I assumed that Nvidia, which has a dominant market share now, because these chips were so essential to the AI story, would continue to have a dominant market share. Not maybe 80%, but 60%. And finally, as I said, the margins were sky high. I assumed they would stay sky high because everybody needed these chips. Let's face it, Nvidia had immense pricing power because the demand for these chips came from the fact that people believed that they could not build AI systems without these chips. So that's as of Friday. You're seeing what happened over the weekend. Wasn't really over the weekend. The story of DeepSeek goes back to 2010 when Liang Wenfeng, software engineer, founded DeepSeek to make money as a hedge fund. Basically, he was going to use AI-like products, and that tells you AI was born well before 2022 to make money. Now, he really didn't get much traction doing that, and facing a Chinese government that was, kind of suspicious of speculative trading, he pivoted in 2023. After the AI story took off to say, okay, we're going to create a Chinese competitor to OpenAI. Because his intent was to enter the market with bargain basement prices, he realized he couldn't spend tens of billions of dollars like Meta and Microsoft were, because then he couldn't make his money back. So he did what disruptors have always done, which is look at the end game, the product, and say, is there a cheaper way, a different way I can get there? And rather than invest in the traditional story, expensive infrastructure and huge amounts of data, DeepSeek found a way, and I'm perhaps being simplistic here, of using much cheaper, less powerful chips, not even AI chips, less powerful chips. And instead of using immense amounts of data, you work with less data, but use rule-based logic to fill in the gap. And it worked. You're saying, why haven't I heard from it before? Because it became publicly available just before the last weekend. And starting Friday, you start to get glowing reviews from tech titans who looked and said, this is pretty good. So as you look at the DeepSeek story, it's easy to get distracted because there are side stories here which are interesting, but if you go down those paths, you're going to get lost. The first is the story of how much it cost to develop DeepSeek. I've heard numbers in the few millions. They developed DeepSeek with 5 million, 6, that's fiction. I'll wager it cost hundreds of millions, perhaps even $1 billion. And along the way, they used resources, including a few Nvidia chips, to develop the product. It's still impressive, right? Because even if it cost $1 billion, Meta is expected to spend $65 billion, Microsoft $80 billion. It's still extremely cheap. So it's a low-cost development, but perhaps not as low as the numbers you see. The second is, a lot of the weekend, I was looking at people talking, comparing DeepSeek to ChatGPT, DeepSeek to Gemini, DeepSeek to Claude, existing players, and concluding that it was holding its own and perhaps even beating the existing players. Amazing if you think about how much money went into developing ChatGPT. When OpenAI has raised and spent tens of billions of dollars, it was outperforming them on some dimensions. It's interesting, and we'll talk about why this might be, where at least the tests I've seen of DeepSeek versus ChatGPT suggest that DeepSeek actually does better on engineering and scientific queries, and that ChatGPT continues to hold its own on verbal query. So if you want your email written differently, ChatGPT would do it better. We'll talk about why that might be. Right? There's also the part of the story where DeepSeek was developed in China, and that adds a twist to the story because, it's a twist about what does that do, the worries about sharing data with the Chinese government. And there may very well be action against DeepSeek because of it, but the genie is out of the bottle in a sense, because what DeepSeek did cannot be undone. The fact that DeepSeek is open source kind of defangs the Chinese story because it basically means that other developers in other countries can build off DeepSeek. And just in the last few days, there's been talk about OpenAI suing DeepSeek because they felt that that DeepSeek used data that was proprietary to OpenAI. There's a whiff of sour grapes to this, but the lawsuit might go forward. Who knows where that goes? These are side stories. To me, the big story with DeepSeek is what those side stories don't tell. But the effect of DeepSeek on the market was almost instantaneous, right? Between Monday and Wednesday, if you looked at what happened to the big tech companies and the companies in the AI storm, the effects were immediate, but they were disparate. What does that mean? A company like Nvidia between the 27th and 29th, 3 days, lost about 13%. Broadcom lost 16%. Constellation and Vistra lost about 15 to 20%. The architecture companies. Palantir actually was fine. We'll talk about, maybe we can set up a structure that talks about why Palantir was relatively unaffected, the other four were. Meta and Microsoft, the two big tech companies that have been most active, kind of not much of an effect. So it's interesting, the DeepSeek story has had an effect, but it's disparate. So let's get past the side stories and look at what I think is the main story with DeepSeek. When I read the story about DeepSeek, what struck me as most impressive was the fact that the people, DeepSeek creators, chose not to go with the prevailing narrative. Remember, the prevailing narrative said you need to invest in Nvidia chips, you need huge amounts of data. And instead ask the question, what are we trying to do? Is there a quicker and cheaper way of doing it? Now, that's why I described it as a classic disruptor's path. There are people in hindsight who look at what DeepSeek did today, smart engineers, software, who are saying, I could have done that. And if you're wondering why others didn't do it, it's because while it's easy in hindsight to say, I could have done that, it takes courage to go against the conventional wisdom. That, to me, is the most impressive part of the DeepSeek story. So let's play it out. Let's assume that DeepSeek either doesn't deliver on its promises, it's stopped through legal or government action. Can we go back to last Friday? No, I don't think so. Because what it has done to the AI story cannot be undone. It's broken the prevailing narrative. Remember the story of the emperor's new clothes? You've never heard the story. It's about an emperor who walks through the town naked. But people have been told that if they're really smart, they will see that he's wearing the most expensive clothes. Well, the only reason they can't see it is they're not that smart. So everybody convinced themselves that he was wearing amazing clothes until a child pointed out that the emperor has no clothes. If you think about the AI emperor, what DeepSeek has done is, if not unclothed the emperor, claimed it, and at least the AI emperor has had a wardrobe malfunction, and it might be time to take another look at the AI story. Now, when I teach my valuation class, for those of you who know what I do, I'm a teacher. And last week I started my undergraduate valuation class. It was the first session, and during the first session, I talked about how every valuation is a link between story and numbers. And as part of that discussion, I said, when you value a company, you're telling a story about the company, and that story can change, sometimes overnight. Now, I don't know how much the words registered, because a lot that I say that they listened to and they said, right. But you know what? The DeepSeek story brings home those words much more effectively than anything I can say. Because, when your story story has an alteration, it can fall into one of three buckets. Your story can break. What does that mean? Well, whatever story you were saying until yesterday, what's happened has broken the story. The example I often give is of a young pharma company working on this blockbuster drug. Everybody's looking forward to making billions, and suddenly at one of the stages of the testing process, it fails. That's a story break. A story change is something changing fundamentally in your story, that, or in good ways or bad ways, a dimension added on or taken away. And a story shift is your core story stays the same, but you could have shifts in the parameters. So the question with DeepSeek is, has it broken the AI story? Has it changed it, or has it shifted it? So let's go back. The pre-DeepSeek story was a simple one, right? There's a big market for AI products and services, trillions of dollars, which requires this entry fee of huge investments in supercomputing and data. That's a core story. So the question is, what does DeepSeek? There are three ways you can read it. And if you think about the continuum, one is that it's a story break. That starting this week, the story is completely changed. That you really don't need supercomputing or data at all. That would be a story break. What does that do? It devastates it makes the entire AI product and service business a commoditized business. In fact, it creates an ironic endgame, which is, if this is truly a story break, we're all going to have access to far more AI products and services, and many of them are going to be free or very low cost. It's a story break. A story change is that DeepSeek will change the AI story, but only for a segment of the AI market. That there's a segment of the AI market which I'll call low grade, and I'm not passing a quality judgment, low grade in terms of their demands for supercomputing and data. And that portion of the market will now become commoditized, and companies can enter with low grade computing power and less data. But there will be a segment of the market, it'll bifurcate the market, which will be a premium market, which still requires supercomputing and data, where people can still charge high prices and make high profits. That's a story change. And then there's a story shift, which is that DeepSeek will change nothing, that this is just another shooting star, that you might rethink that, but next week we'll be back to treating AI companies the way we were, and that the high entry cost requirement will remain. So the question is, where in that continuum does DeepSeek fall? Now, I'm going to, again, as I said, admitting that I'm a novice, I know very little about AI, I'm going to give you my feel. And the reason I have to do it is, not because I am trying to be an expert, but because I need to do it. And I'll explain in a minute why. I do believe that DeepSeek will change the AI story. It won't break it. It won't shift it. It'll change it. It'll create two pathways to the AI product and service endgame. One pathway will lead to these low intensity AI products where you don't need the supercomputing. And in that segment, you will get low margins, lots of competition. Then there'll be another segment where the old story will prevail, where you will end up with a premium market, where there'll be a few big winners who make tons of money. Right? So if you think about the market consequences, it effectively means that there'll be two markets, an AI market which is commoditized, lots of competition, AI market that's premium with relatively few players. And as I said, as consumers, we are likely to see more AI products and services because of that first portion of the market. And I don't want to talk about it as consumer versus business, but the business segment, there might be more of the premium market that you see. So I decided to revisit my Nvidia valuation. Now, after all, story changes, you have to revisit value. So in September of 2024, if you remember, the AI chip market that I used was 500 billion. In my bifurcated market, it's 300 billion. Now you see why I had to retell the story. It's not because I'm an expert or I have an ego. It's because I have Nvidia. A portion of Nvidia is still left. Why a portion? Because I did sell half of my Nvidia holding, 2 years ago when I first valued Nvidia. I've held on to the other half, and the question is, should I continue to hold on? I do think that in the premium market, the market's going to be smaller because you don't need the chips for everything. A $300 billion market. Why 300? Why not 350? Hey, you take your pick, because that depends on where in the continuum you're going to put. I picked 300. I do think that Nvidia will continue to dominate that market and continue to maintain its margin in that market. Right? So it's a smaller premium market, but it still has the characteristics of the old story premium market. The cost of capital have shifted, not because of Nvidia doing something dramatically different, but because the T-bond rate has gone up and the equity risk premiums have changed. Yeah. I did update the numbers for Nvidia from September to now because there's been one additional quarter of data. If you remember my Nvidia valuation in September of 2024, the value I got was about 87. That's now down to about 78. I was actually surprised it didn't drop lower, but no, I've lost some oxygen in my story, but it's still a very valuable company. It's now more overvalued than it was because the price has moved in the wrong direction. So I think it's time for me to do what? Sell another half of the half I've left, which leaves me with a quarter. Why not sell it all? Well, greed is kind of dragging at me. And I've also talked about the regret effect, which is you sell everything and you look back and say, I wish I hadn't done that, and I'm trying to minimize it. But it does look more overvalued than it did last Friday. Okay. So I thought about the bigger effect. So if you think about DeepSeek as a bomb that went off, I know this is a violent metaphor, but kind of hang in there. When you think about bomb damage, people assess it in terms of severe damage, moderate damage, and minimal or no damage. Say the DeepSeek bomb has clearly gone off. And by DeepSeek, it's not just the company, it's what it's brought to the table. I think the most severe damage is to the AI architecture companies, the chips, the energy, the data companies. The moderate damage will be to the low-grade AI product and service businesses. These are the low-grade because they don't require as much data and less power hungry. And the minimal or no damage will be high-grade AI product and services because you still need the data and power intensive. Remember that Palantir was almost unaffected on the day that Nvidia lost 15%. You can see it play out. Why? Because Palantir produces products and services for the Defense Department and commercial businesses that is high-grade AI, which is not just, in contrast, if you came to me with an accounting AI product, I'm not sure you need Nvidia chips or lots of data because accounting AI is rule-based, and the truth is there have been products which are like accounting AI around for 20 or 30 years, so it's not exactly a revolutionary change, and to require me to invest tens of billions in AI chips to get that seems like an overreach. So if you look at the DeepSeek effect on business, it's going to vary depending on the business you're in. The architecture business, the AI architecture business is going to have damage short-term and long-term. You won't need as many chips. You don't need as much power. So it doesn't mean every power company is going to see its price marked down, but those power companies that have explicitly gone after the AI story actually have built power capacity for future AI data centers will take the hit, and they, in a sense, deserve that hit. Among products and services, as I said, if your proposed AI product is low grade, then the effect on AI is going to be larger because it's now changed the market you're going to be in. It's going to be more commoditized, lower margin, lots more competition. I've got value on that basis. If you're in the segment that's high grade, I'm going to put you to this. Tell me why it is high grade. Why do you need to know the data? And I, at the risk of generalizing, I think the more intuitive AI, the AI that is trying to replicate or imitate human decision making rather than follow rules in the face of uncertainty, is likely to survive the DeepSeek effect and perhaps not even be affected and maybe even gain from it because there'll be fewer players coming after it. Now, there's one final segment, which is the big tech companies. What are they going to do? The big tech companies always seem to come out of these processes winning. And my feeling is that DeepSeek might not just not affect these companies, but might leave them in a better place. Because if there's a segment of the AI product and service business that is low grade, that is going to become this commoditized version, the big tech companies might be big players in that space and use it as freebies for the people on their platforms to keep them in their ecosystem. You're saying, what does keeping them in the ecosystem do for them? When you stay in the Meta ecosystem for longer, they make more advertising money. When you stay in the Amazon ecosystem longer, they sell you more stuff. So with big tech, there's much to be that's still unknown, but I have a feeling that they will come out of this. There might be some buyer's remorse about the tens of billions they've spent on Nvidia chips that they don't need. But you know what? They have more than enough cash cushion to cover that. So the DeepSeek effect on businesses all over the place, depending on what you do in the AI space. Now, is there a healthy side effect of DeepSeek? No, I think so. And here's why. Whenever there is a development that is viewed as revolutionary, there's a tendency early in the process to give it a catchy name and then use it as a rationale, if you're an investor, to push up the prices of everything in that space, or if your business, invest huge amounts in that space. I'm old enough to remember other revolutionary changes, right? You can think about PC, the internet, the social media, and this has happened in every one of them. I remember early in the internet in the internet game in the 1990s, a company was just described as an internet company. AOL was an internet company. You know, you could have Cisco was an internet company, Amazon, but they were very different companies. As AI matured, we learned that not all as the internet matured, we learned very quickly that not all internet companies were created equal. We learned to discriminate. And with AI, one of my concerns has been that for the last 2 years, the way investors priced AI companies was to just say, they're an AI company, they must be worth a lot. I hope that what DeepSeek does is it makes us a little more discriminating. What does that mean? If a company claims to be an AI company, I'd like to know more. Are you in the architecture space? Are you in the product or service space? If you're in the product or service space, are you producing a product that is rule-based, that is low-grade, essentially doesn't need the huge amounts of data and supercomputing power? Or is your product and service something that's high-grade? I can't assess whether you're a valuable company without asking those questions. It might be too much to ask, but I hope that's one of the healthy side effects. Now, as a personal bottom line, my investment in Nvidia essentially was completely accidental. It has made me an accidental tourist in this AI country, wherever this amazing space. You know. But I've remained skeptical about AI for much of the last 2 years, and this may just reflect my age. I mean, I get offered, I'm sure you do too, another AI product or service every day, right? Or every week or every month. You open up Zoom, there's a little AI and I'll be quite honest, you know, I find them neat, but if you ask me, would I pay extra money for that AI? I'm not in the least bit tempted. I also work in valuation corporate finance, and I see these new AI products and services people are coming up. An AI valuation product, an AI accounting product. And the reason I'm skeptical is these are, for the most part, rules-based disciplines. And I understand that the desire for an AI accounting product, but I don't understand why I need to invest billions of dollars in a supercomputer and data. I don't need to know how every accountant in history has done accounting to be able to do accounting today. I just need to know the rules today. So I think that, and as I said, this is just personal, most of the AI products and services that I see being talked about, if you ask me to describe them, they're neat, maybe they're cute, but they're not that would change my life products. And if they're not that would change my life products, I'm not going to be paying billions of dollars, tens of millions of dollars, or in the personal case, hundreds of dollars for that product. And I think that, that's part of a larger process that I see play out every time you have one of these revolutionary changes. There's a reality check that arises. It happened at each of the social media, internet. And when that reality check happens, it's not that it kills the change, it brings it back to earth. And maybe DeepSeek is the best thing that could have happened to AI. On a bit more general note, much of what I've said goes against the conventional wisdom where people are arguing that AI is going to be this amazing, world-changing innovation. Now, I've kind of read parts of Reid Hoffman's book, and of course Sam Altman at OpenAI puts out that this is going to relieve us of pains of tasks that are boring and time-consuming. And it'll replace sometimes flawed human decisions with more reasoned AI decisions. That's the sales pitch. They're smart people, and I'm not denying that. But I have two reasons I'm skeptical. I hang around for, given what I do, I'm lucky enough or unlucky enough to sometimes hang around with very smart people in different areas. I have smart bankers, smart software engineers, smart VCs, smart hedge fund honchos, and smart academics. And you know what? They all have each of them has a set of blind spots. And much of it comes from the fact that they tend to hang out with people just like them. Okay? So they're smart people, but I know from history that smart people can have very big blind spots. I'm also old enough to have heard this talk before. I started in this process in the 1980s, and I did my first valuation on a ledger sheet with a calculator and a pencil. And I was told when personal computers first came out that it would eliminate the drudgery of going through ledger sheets with calculators and pencils. But as any young financial analyst who's out there today will tell you, we've just replaced an old form of drudgery with a new and perhaps a more soul-sucking form of drudgery, where monstrously large spreadsheets govern your workday. I was told in the 1990s, when the internet first came out, that it was going to create a world of more informed people, maybe even wiser people, because we could look at all of the knowledge in the world in one place. Yeah, hindsight, how did that work out? In fact, I think it's weakened our reasoning muscle by allowing us to look up pretty much everything online. And for every piece of information you get online, you get 9 pieces of misinformation. In this century, we were told social media was going to change our lives. Remember that the original sales pitch Mark Zuckerberg gave for Facebook was, this is going to keep you connected. It's going to make us healthier and happier because we can connect with friends even if they're thousands of miles away. Not exactly worked out that way, right? As my good friend Jonathan Haidt and others have pointed out, social media has just made us more isolated and less happy than ever before. I'm not suggesting, I'm not cynic here, I'm not a Luddite, but I am wary about these promises because I've seen this movie before and it's not always had a happy ending. DeepSeek is a moment for us to stop and ask why. Why do we accept the story? And maybe it'll allow us to ask a deeper question about AI in general. On that note, I'd like to end this session. I hope you found it useful, and thank you very much for listening.